I need your mind, your body, and your soul. I need total attention now. Right. What are we calculating? We are calculating the fixed assets that have been purchased. Okay, here goes. Now, obviously, there are two different ways in which this can be examined. If you are given the cost price, and therefore you will notice I've got the cost price method there. What do? You open up your asset account, okay? Once again, follow the procedure. Watch the modus operandi. What do? We start off by inserting the opening balance. It's an asset account, therefore having a debit balance, so therefore on the debit side, you indicate your debit balance. Got that? Step number 2, insert your balance at the end of the year. There's your closing balance, right? It's a balance brought down, balance carried down, so you know exactly that that's your closing balance. And grade 12s, you can immediately pick up the trend here. Where do I start from? Opening balance, closing balance. These things are important because you can see exactly where we slot them in. Right, once you've done that, now go and look for the asset disposal. What is the asset disposal? So one of our callers asked about the asset disposal. The asset disposal is the asset that we sold during the financial year. Now remember, we will always dispose of the asset at carrying value, but that only applies to the cash flow statement. Please don't go and say, Ashraf said that we sell the asset at carrying value right through the curriculum. Not true. Only in the cash flow statement do we dispose of the asset at carrying value. Got that, guys? Okay, so therefore, if I now slot in my asset disposal, obviously that would be the cost price, isn't it, of my asset. And therefore, 360 plus 50 is 410,000. Look at the magic of the T account once again. How important. The moment you face a challenge in the paper and you are unsure what to do, throw off the T account very quickly, because very often if you do that, it makes your task so much more easier. Watch this. If there is 410,000, left-hand side has to equal the right-hand side. That's a ledger account. And the missing figure becomes this bank figure here, indicating to you that you have purchased a tangible asset worth 210,000.
Okay.
Right. So once again, opening balance, closing balance, slot in your asset disposal, and there you're going to get your missing figure. Right. Now, in your asset disposal account, what happens? You've got the cost price of the asset, 50,000, right? The accumulated depreciation. What type of an account is accumulated depreciation? And accumulated depreciation is what we call our negative asset. Why? It indicates to you the value of the asset that has been used up. In other words, this asset of mine, this calculator of mine, has two values. The positive value, the historical cost concept, 50,000, that's what I paid for it. Up to now, how much of the asset have I utilized already? I've used up 40,000. Here you can see it. There's my 40,000. That's the value of my asset that I've utilized. Okay, so therefore, what's the carrying value? Cost price minus the accumulated depreciation is equal to my carrying value. Therefore, I can immediately see that the asset has been disposed of for how much? 10,000 rand. And because it's cash flow, my carrying value is equal to my selling price. In other words, there is no profit or loss on sale of asset. But again, I'm stressing this. It only applies for the cash flow component of your question in your paper, not to other sections.
Okay.
Got
I can
it?
see already the trends between all of the counts, the calculations that we made.
Absolutely. There's always a link between what we are doing. Okay, right. Now, that was the cost price, guys, when we were dealing with the cost price. But now you get something different. Okay? We call this a curve ball. You know when the examiner throws a curve ball at you? So, you know, you got to know how to play it.
Yes.
What we're going to do? The asset is now given to you, but it is given to you at carrying value. Notice the change. Immediately, you realize now, I can't take the cost price route. I have to change my garment and move the carrying value route now.
Okay.
Because the information that I have does not allow me to use the cost price method.
So a different method right now.
Absolutely. Why? Because I'm not given the cost price, I'm not given the accumulated depreciation, I'm only given the carrying value. Got that, matriculants? Now when that happens, then this is what you do. What do we do? Watch. You start off with your asset, but the asset is given to you at carrying value, and that's the most important consideration here. The asset is given to you at carrying value. So start off, indicate the balance. There's my balance at the beginning of the year. Again, go to your balance sheet, look at the beginning of the year, look at your arrow, determine which is the beginning of the year, determine which is your end of the year. Okay? And clearly you will be able to see now that that is my opening balance and that is my closing balance. Got that? Okay, now, next step. Now I say, fine, because the asset is at carrying value, immediately it tells me something, that that no record has been kept of the accumulated depreciation. Okay, in other words, what do I now need to bring in? I now need to bring in my depreciation. Remember, we alluded to it earlier on, and we said that depreciation is an imputed expense, an expense that does not affect the flow of funds. What's my regular entry for depreciation? What's the normal entry that I do for depreciation? Come on, guys, you should be shouting out the answer by now. What is it? A debit to depreciation. Why? It's an expense, decreasing the equity, therefore debited, and a credit to accumulated depreciation. Isn't that true? But now, there is no accumulated depreciation. So what do? Start crying? No.
You work it out?
You work it out. Absolutely. And once you've calculated your depreciation, what's your entry? You debit depreciation and you credit the asset account. There goes. Look at the difference. And this is this is where I want you to focus your attention now. And what I'm going to do, and I'm going to take you back into the other asset account. Notice, in this asset account, there was no depreciation on the credit side.
Yes.
Whereas, in this one here, because we're working at carrying value, you have to include your depreciation, guys. Please, important consideration. And you must have noticed the past papers that you worked with, that they do ask for you to work with the asset at carrying value. All right? Okay. Next one. The disposal of the asset, right? What was an important feature of the previous account that we did? And just to refresh your memories, a reminder is very good. I had my asset disposal at cost price. Remember that? Okay. Watch what happens now. Again, I have the asset disposal, but this time the asset disposal is at carrying value. Please, 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 I implore you, matriculants, that when you are working with the carrying value, remember the asset disposal has to be at carrying value, because all your information in the account is at carrying value, isn't it? That's not the cost price, that's carrying value. So obviously you have to put the carrying value of your asset disposal into that account as well. What do you then do? You balance the account in the normal way, 830,000, add the 830,000, and immediately you find your missing figure, 330,000. What is that figure? The value of my tangible assets that have been purchased. All right. And what else do I need? I also need to know what was the proceed of my disposal. How much money did I get from the sale of the asset? Remember, that's what I want. Remember, there was my carrying value, 30,000. What did we say? In cash flow, we sell at carrying value because there's no profit, neither is there a loss.
Yes.
And therefore, the proceed will be that 30,000. And now, grade 12s, you can clearly see what we've done. We've shown you all the notes to the cash flow statement. Make sure you know them. Make sure you know them. Make sure you can apply them onto the face of the cash flow statement. Well, guys, we've worked very hard this year.
Yes.
And it wouldn't be Ashraf if I don't sign off and say, aim for the moon. If you don't get there, you certainly will be a shining star in the galaxy of South Africa. Make sure you ace the accounting paper tomorrow.